Tax, 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 tax. Before I start, just a quick note to make. Tax in America is a living nightmare. It can also be pretty boring as well. So if you're old enough to drink, I suggest you pause this video now and go get yourself a drink. You're going to need it. If you're not old enough, don't drink. Go get yourself an energy drink or change your diapers. Don't worry, I can hang around. I've got nothing better to do in my life. Just pause me if you want. Back already? Great, let's get started. One of the best things about esports is how international the industry is and how it can reach a wide range of audiences from all over the world. Every year, you have hundreds of thousands of people physically attending esports competitions hosted in different countries. You have even more people who go online to platforms such as Twitch and YouTube Gaming to watch gamers take part in competitions. But with the international nature of esports comes a lot of international tax issues because the money you generate, whether from playing competitions, streaming your gameplay, product endorsements, selling merchandise, can be taxed by more than one country. When it comes to US federal income tax, there are two big questions you need to ask yourself. First, am I a US taxpayer or am I a foreign taxpayer? The second question is, which country does the money I'm making come from? In other words, if you are making money from a country outside your home country, do you also need to pay taxes to that country where the money comes from? Let's start with the first question. Am I a US taxpayer? Now, as with everything in US federal taxation, it's not as straightforward as you might think. So who is a US taxpayer? Well, if you are a company, then you are considered a US taxpayer if the company was incorporated or created, or in other words, organized in the United States. If it has been organized in the United States, then you are a taxpayer. If you are a human, then you are considered a US taxpayer if you are either, 1, a citizen of the United States, or 2, a permanent resident of the United States, i.e. a green card holder, or 3, you are substantially present in the United States. Substantially present. If you fall under any of these three categories, then congratulations, lucky for you, you are now subject to taxation on all income from whatever source derived. What that means is you can potentially be taxed on all income you make, even if the income is from outside the United States. Out of the three categories I just mentioned, citizens, permanent residents, and people who are substantially present in the US, the problem area is whether a person is substantially present. The other two are easy to determine. You are either a citizen or you're not a citizen. You are either a permanent resident or you're not a permanent resident. But what does it mean to be substantially present in the United States? Well, Congress has laid out a two-part test to help determine if you are substantially present. And the test goes like this. Part 1. You are physically present in the US for at least 31 days during the current year. And part 2, you are present in the US for at least 183 days, taking into account this year and the 2 years before this year. It gets worse. There's a formula for how to count whether you've reached 183 days. The formula is 1 day in the current year equals to 1 day. 1 day in the year before equals to 1/3 of a day. 1 day in the year before that is 1/6 of a day. Okay, breathe. Don't freak out. It's not as hard as you think. You will understand when we go through an example. Right, so let's go through this example now. Let's say we have a professional gamer called Newbie Noob. Newbie Noob is not a US citizen and not a permanent resident of the US. Newbie Noob is from Norway, but he regularly travels to the United States to take part in esports competitions, meet his fans, discuss advertising opportunities, etc., etc. In the current year, Newbie Noob is physically present in the US for a total of 120 days. Last year, Newbie Noob was in the US for a total of 150 days. The year before that, Newbie Noob was in the US for 90 days. Is Newbie Noob a US taxpayer? And the answer is, drum roll, brrr, yes, he is. Let's go through the two-part test. Part 1 of the test. In the current year, was Newbie Noob in the US for at least 31 days? Yes, he was in the US. He was in the US for 120 days in the current year. Part 2 of the test. Adding up this year and the 2 years before that, was Newbie Noob in the US for at least 183 days? Yes. In the current year, he was in the US for 120 days. Remember, 1 day in the current year is 1 day. So he was here for 120 days. Last year, he was in the US for 150 days. 1 day last year is 1/3 of a day. So 1/3 of 150 days is 50 days. The year before that, he was in the US for 90 days. Here, 1 day equals to 1/6 of a day. So 1/6 of 90 is 15 days. Then all you do is just add up all the days. So 120 days plus 50 days plus 15 days equals to 185 days. So yes, he was present for more than 183 days. Conclusion, Newbie Noob is considered a US taxpayer. This is the case unless Newbie Noob falls under an exception provided by the law. If you are a US taxpayer, you'll then need to work out how to handle both the money you make domestically and internationally. Some of the biggest problems you'll face is understanding how to handle the money being earned from foreign sources. There really is a lot to cover here, and there's a lot of funny sounding technical terms such as guilty, 245A income, subpart F. Don't worry about that now. As mentioned earlier, we will dedicate a video on this at a later date. You will also need to consider whether you need to pay tax to a foreign country in addition to paying tax in the US. If you are not a US taxpayer, then your tax home is in another country. But does that mean that you don't have to pay any US taxes? No, you may still have to pay tax on any money you make that comes from the US if the income is effectively connected to a trade or business, or if the money is some kind of investment type income coming from the US, like dividends from shares, interest payments from a bond, royalty payments from the US. To cover how all this works will take a lot of time. So again, we'll have to reserve this for another video. So we're going to call that a day, right? So thanks for watching. You've been watching Lemmy, and this is eSports and the Law. Live your life and do what you got to do.